Welcome, everybody, to episode 20. Great to be here with Michael Plax, enrolled agent, real estate tax black belt. For what I'm going to say is the final episode, but I'm having so much fun doing this. Maybe we'll do more, but at least for now, this is the final planned episode in the series, episode number 20 in the real estate write-off series. And the title of this episode is CPAs, EAs, bookkeepers, and other vultures. Basically, these are the folks that you want to consider dealing with and perhaps should be dealing with if you are going to be a real estate investor and need to do bookkeeping, tax planning, accounting. But it can be dizzying to figure out who are all these folks and what role do they play? Who do I need? Who can I do without? And how do they work together? So we're going to define these and talk about the benefits of working with professionals. We'll talk about the gotchas. What are, always got to watch out for certain things. Sometimes they're hidden, not so obvious. And we'll talk about the steps that you've got to take to potentially move forward with selecting professionals if you'd like to go that route. So Michael, hand the floor over to you to begin with the benefits, gotchas, and execution in this last and final episode of this series.
Thank you, Bernard. Thank you to everyone who stayed with us through our 20 episodes. And I want to start with something other than benefits. I want to start with one general comment about DIY. So in our life today, with the availability of information so wide, through online research, through online classes, and all these venues, pretty much anything you can think of can be DIY. Pretty much anything. Okay. The best example I can think of is feeding yourself, right? Okay. We still, for some reason, go eat out. Why? Okay. You know, saying is, okay, personally, myself, I can't cook. Can I learn how to do that? Absolutely. You know, there are classes, there are videos, there are books, there are multiple ways I can learn to do that. Why? Haven't I learned how to cook and instead rely on other people to make food for me? Like in my personal situation. One is I don't enjoy that much. You know, to be honest, I tried, not my thing. The other one is when I tried, I'm not good at that. Three is I don't like to be spending my time on that. I think my time is better spent in generating money in my business when I'm working or doing things that I truly enjoy when I'm not working, which have nothing to do with taxes or Uncle Sam or real estate. So when we make those decisions, whether to do something, we compare those factors. Let's look at rehab. Can you rehab your property yourself? Yeah, you can learn all of these skills. Many of you guys do that. Many of you like swinging your hammers yourselves, and you are doing part of those jobs, sometimes because you enjoy it, sometimes because you think it saves you money. Now, that notion, in my opinion, is very wrong unless you truly are a professional in the trade that you are doing this. Why? Not because you cannot do it as well as a professional. I don't know. Maybe you can. Many of you have good enough skills to do that work yourselves. The issue is not your skill, but your time, the value of your time. What you are trying to do when you are doing the work yourself is you are doing a work of somebody whose time is worth, let's say, $25 an hour. What you can pay for some skilled labor in some of those trades. Okay, yes, I know it differs on the trade, differs on the region. Let's take $25 as an example. But how much your time as a real estate investor is worth? I bet that it's worth more than that. So you spending that time on doing painting is bad use of your time, even if you can do the job. And that same concept completely applies when we talk about professional services related to your numbers, which is bookkeeping, tax preparation, and all of the other tasks that relate to your numbers, starting with bookkeeping. So I want to start with this because this is the foundation of everything else. You like to comment on that always, Bernard, so I will let you chime in on bookkeeping as it ties to your business as much as it ties to mine.
Absolutely. There are two things that I would want to mention. One is something that in the industry that's full of acronyms. There's LIFO, FIFO, and all sorts of acronyms in the tax world. There's also something called GIGO. GIGO is GIGO, and it stands for the very sophisticated term of garbage in, garbage out, which means to say is anybody can produce a spreadsheet or a financial statement, or a tax return. But the tax return or the financial statement or those books and records are a result of the inputs. And if the inputs are garbage, even if you have the savviest accountant or savviest enrolled agent or savviest tax professional creating your tax return, that tax return or whatever the end product is will be garbage because they are working with the inputs that were created when the bookkeeping was done. So if the bookkeeping is not of a high quality, everything that is built on that will not be of a high quality. So what is bookkeeping? And maybe Michael will elaborate, but it is imperative that it is done correctly and that it be done with a level of expertise that bookkeeping is required so that all the professionals that work with that information are working with high quality set of records. That's
what I would want to comment here, Bernard, is that I want to share a personal story of what happened to me multiple years ago when I was looking for a partner bookkeeper, somebody who can serve my tax clients on the bookkeeping side. I exported a directory of certified Intuit advisors. These days are called pro advisors. So these are people who are certified by Intuit, company that produces TurboTax and also produces QuickBooks. So very famous company, very popular bookkeeping software. Also, they do other packages, like not just QuickBooks. There was Quicken, which is much simpler expense tracking app, and various other software that Intuit does. So they have a group of people who are certified by the company as being professional. So who would you want to work with if not certified people by the company who does QuickBooks? I called these people, played an investor, and my first question was, I was going down the list alphabetically, calling the first person saying, okay, I found you on that list. Well, I'm a real estate investor.
This sounds like phone scams.
My bookkeeping. Do you work with real estate investors? Without an exception, everybody says, yeah, absolutely. And it's great. Okay, I have a question for you. I just finished a subject to deal. Before I finish the phrase, they interrupted. I'm sorry, what deal? And that's the test that you have to run. Once you start talking to these bookkeepers, what you will realize is that most of them do not speak your real estate language. Literally don't. They do not understand what you are doing. They do not understand your business. So why it matters? Because bookkeeping for real estate is extremely different from bookkeeping for other businesses that are straightforward. What is straightforward? Being a realtor is straightforward. Selling stuff on eBay or Amazon is straightforward. Even running a medical practice, accounting-wise, is straightforward. Real estate is not. If you are holding rental properties or if you are doing flips, the complexities of real estate bookkeeping require somebody to understand that. If they don't, even if they're certified advisors, even if they boast having 20 years of experience doing books, they are going to do what Bernard was just talking about. Garbage in, garbage out. Your result will look as, oh, you have financial statements. They are completed. My job is done, says that bookkeeper. Then you take that work, bring it to your tax person looks at it and saying is, I cannot work with that. This is complete nonsense. That is not workable, makes no sense, but you said, you have no idea how much money I just paid this bookkeeper and how experienced that bookkeeper is. And I'm saying, no, I understand. I have seen it many times, and I have said many times to people before you, this is garbage. This person may be a great bookkeeper for straightforward businesses, but they clearly do not have real estate experience. And real estate specialized bookkeepers are extremely difficult to find. They are far more difficult to find than people like me or Bernard. If you are looking for a good cost segregation company, there are choices of companies who can do it competently. You are looking for a CPA to do your tax return. There are a number of good CPAs who specialize in real estate. Not as many as I would want to see, not as many as you would want to see, but still more than if you are trying to find a bookkeeper who knows how to do real estate. So beware when you are in the market for that. Now, Bernard, from bookkeeping, let's move to the next step. And next step is not tax preparation, as many people would think is, because the other part that goes into preparing tax return is the third one. So first one is bookkeeping, but then there are tools that real estate investors use and strategies that they implement, results of which will go into tax returns. And that's where your company and your services come in. So would you explain that part, please?
Absolutely. And it really is a team effort because all of these different functions have to have real estate expertise and function integratively. And so what are those? We had episodes about cost segregation, depreciation, 1031 exchanges. Now, all of these things will ultimately have impact and flow into your tax return. So your depreciation is something that is going to have to be reflected in your books and records. And for purposes of this episode, and for what most real estate investors are going to work, keeping your books and records on a tax basis is going to be the simplest and most efficient way to go. One of the items that has to be recorded is depreciation. So in your books and records, you're going to have an asset recorded, and you're going to record a depreciation expense in your profit and loss and depreciation on your balance sheet against that asset. Well, you're going to have your tax depreciation, and then you will also may want to increase that through a cost segregation study. So a cost segregation study is going to change the way your depreciation schedule looks. And so when you do your tax return and when you do your books, you want your books to reflect the depreciation claimed via cost segregation. And a cost segregation, when we provide a cost segregation study, we provide a cost segregation schedule that your bookkeeper can incorporate in your financial statements that will show the accelerated depreciation that is claimed in year one that will go in both your profit and loss and your balance sheet. And once you have that, that gets handed off to your tax professional to incorporate in your tax return.
And now we're talking about tax professionals. And here I want to point out a little bit of irony because I want to mention different groups of tax professionals, which are in the title of our episode. And right now you can see it on your screen. Two of the most important designations are CPAs, which stands for Certified Public Accountant, and everybody is familiar with that. And the less familiar designation of a tax professional is EA, which stands for Enrolled Agent. And this is designation that I carry. Here is the irony. Okay, Bernard, you have a CPA designation, but you're not preparing tax returns. I do not have a CPA designation. I have an EA designation, and I prepare tax returns. So how does it work? What does it matter? How do you choose? Let me tell you my advice to all investors in real estate, how to choose tax professional by designation. My reply will be ignore the designation completely, because here is what happens. There are CPAs like Bernard, who is an exception actually to that rule because he is extremely knowledgeable in real estate taxation, but he does not work in that area. There are multiple CPAs that have CPA designations, but no, not only they are not familiar with real estate taxations, they really are not expert in taxes at all, because their CPA work includes something else, such as being a CFO for a corporation and handling their financial operations, and they don't know anything about taxes. On the other hand, there are people who hold no designations at all and could be exceptionally skilled and good at what they do. So designations are not important, in my opinion. What is critically important is specific experience in real estate. This is what you are looking for. You are looking for, just like in any other field, just like bookkeepers, for example, just like attorneys, okay, certifications, affiliations, those letters after the name are not nearly as important, and sometimes actually not important at all, as specific experience in real estate field, which is difficult to find. I cannot tell you how many hundreds of tax returns over my almost 30-year career we had to redo in our firm, and they were signed by people with designations. So what do you see when you go to generic tax firms, like your neighborhood H&R Block or Liberty Tax, or any of those other franchise tax people? What you have there are general practitioners, people who work with all kinds of people, people without businesses, people with all kinds of businesses, people with investments in stocks, but very few of their clients will be investing in real estate. So are they going to know about strategies that you know about, that we spend episodes discussing this? Have they heard about cost segregation? Have they heard about STR loophole? Have they heard about self-directed IRAs and all of those other things that we talked about? No, most of them have not. Worse, some of them haven't even heard of depreciation, much less like all of those advanced things. We have seen countless returns signed by CPAs working for H&R Block, and we look at that return, there is no depreciation on rental properties at all. None. Not to mention advanced strategies and sophisticated ways to do that. So what you are looking for is not the price, not the designation. You are looking for experience. Now I mentioned price, and this is a sensitive topic for everybody. I'm like everybody else. When I shop for services, I don't want to overpay. Problem is that there is never, and I'm not even saying almost, I'm saying it's never a true apples to apples comparison when you are looking at what two people charge for preparing tax return. Okay, just like in my previous example. Okay, I compared professional services early on, a few minutes ago, to eating outside, to restaurant meals. Can you compare? Say, oh, the dish in that restaurant is cheaper. Yes. Is it the same dish? Is it the same service? Is it the same atmosphere? So I wrote a very long post that we're going to link underneath our video. And you can click on that link and read that long post where I go into details explaining something that is critically important to understand. When you hire somebody to prepare your tax return, there is no ROI. There is no return on investment. When you look at property, that's what you look at. I put so much money down. What is my cash on cash return? And often people look as, okay, if I pay my CPA $1,000 to prepare my tax return, how much does it save me? If I pay my CPA $5,000 for a service that includes tax return preparation and tax advice, tax strategies, how much am I going back? You cannot evaluate that in terms of ROI, unfortunately. And we don't want to spend, we don't have that kind of time to go into detail, but I want Bernard to give you time to give just a few examples of why this is so, why we cannot measure professional services in terms of how much savings they generate. Would you mind commenting on that a little?
Let's do it. And the way I phrase it is that there is ROI, but the calculation cannot be put in 3 cells on a spreadsheet. The ROI is actually, I would say, almost infinite, and it just doesn't fit in so tidily into a spreadsheet. Whenever we deal with abstractions and things that are not strictly numbers, it gets harder just to determine the ROI, but the ROI is tremendous. So in terms of what you don't see, sometimes having a great tax professional, right, is going to be pointing out tax saving strategies that you can use that you're not going to get. However, you don't know what those are unless you actually engage with the professional that has that knowledge and they share it with you. So if you just look at the superficial level, oh, I'm going to get a tax return here, I'm going to get a tax return here, and this is the cost, then you're missing that, because the key component is what kind of strategies am I going to get and how much tax savings can I generate? The second thing is, and ironically, sometimes working with an experienced and expert and honest tax preparer may not result in bottom line tax savings, but it will result in a tax return that is more accurate and defensible, which means you don't walk around with the hidden risk of dealing with what we discussed in a prior episode. What's the value of that? How do you quantify that? That is very difficult to quantify, but it is worth a lot. If you try to translate it into terms of dollars and cents, it is incredibly valuable. But it's a pure abstraction, and you don't know exactly what that is. A great analysis, a great analogy, and then I'm going to borrow some. This is borrowing this from a book. Suppose somebody had said, a legislator to introduce new legislation in the year 2000, saying from now on, we must reinforce cockpit doors on airplanes. They must be reinforced with reinforced steel. And now the airlines, the cost of building planes goes up by billions of dollars. And everybody is against that legislator. And he loses the next election because the whole airline industry and lobbyists team up against him. Well, we never would have appreciated his value because 9/11 would never have happened, right? So we never realized what that ROI is because he saved us from something that never happened. But can you imagine what 9/11 has cost us? We can't put a value on that. So when we deal with abstractions, it is very hard to quantify the ROI. However, the ROI of a great real estate tax professional is in fact immeasurable and infinite, but it doesn't fit nicely and tidily on a spreadsheet.
Okay, we did not plan to have our like 20th episode to end on such a somber note referring to the 9/11 tragedy. So in the closing minutes of our episode, there are two things that we want to bring up. Like the last one will be a recap of what we covered in those 20 episodes, which Bernard will do momentarily. Before we do that, I need to close that episode on the execution part of that. And the execution part of that slide makes a point that is often overlooked, resulting in extremely costly mistakes. So that one says, get your experts working hand in hand. What am I talking about? So let's talk about Bernard and me working hand in hand. Bernard's Reassure company, one of the services that it provides is cost segregation. So let's say that we are not coordinating this at all. And you go and hire a company. Well, that will not happen with Bernard because he runs his company with integrity, which I wish every other company could execute. But so sorry for bringing Bernard in that example, it's not personal. But somebody goes to this cost segregation company, pays significant amount of money, let's say $3,000, in order to generate large tax savings, create a report where Bernard's estimate, which he gave for free even before charging $3,000, says, well, my estimate says that you are going to save at least $50,000 in the first year and another $30,000 in the second year. Well, that sounds tremendous. I will always pay $3,000 to get these types of savings. So after doing all of that, you come to me, I look at that, and with a sad face, I inform you that even though I would love to show you this 50,000 savings, I can't. In your particular situations, savings in the first year are 5,000, not 50. Why? Because of the specifics of where you are. Something that Bernard did not consider. And actually, again, I'm using Bernard's name, but his company does not operate that way. It's really not the job of cost segregation company to figure out whether you could benefit from that and to how much, to what degree. Their job is to do professional cost segregation study. So we need to work together. In what fashion? I, as an accountant, do my calculations and tell you, if you do cost segregation study, you can save $20,000. You said, sounds good. Then you go to a cost segregation company of Bernard, and he provides professional cost segregation study, something that I cannot do for you. This is something for which you need a specialist. Then I take results of his work and incorporate that into your tax return. That's how we work together. Another example of the same scenario, another service that Reassure provides, Bernard's company, is being a qualified intermediary QI for 1031 exchanges. Again, we work together. How? First, you talk to me. I look at that and saying is, your tax impact from the sale of your property is going to be significant. Because if my calculations say that your tax impact is going to be small, there is no point in 1031 exchange. So first, you work with me, again, not me necessarily me personally, although I would welcome that, but with somebody who is a tax strategist and tax expert who can look at your specific situation and say, you are looking at 25,000 capital gain tax if you don't do anything. Okay, oh, I want to do something about it. Then you need to execute 1031 exchange and hire Bernard or another QI company to do a 1031 exchange. After it's done, the results of that are done with me, and his company or another QI who you hire would guide you step by step through all the complexities of 1031 exchange. And believe me, there are a lot of them where you need to do that. So we all do parts of that. And while we are doing that, a bookkeeper, a third person in our team, is going to need to be on the same page with all of us, with all of these companies who are involved in improving your financial situation, reducing your taxes, and doing things as a team. If we're not on the same page, you will pay more, you will double pay, your results will be not what you want, it will be frustrating, and that's not what anybody wants. We don't want frustration, we don't want troubles from this guy, we don't want any troubles at all. We want to be happy. And we want to save money, which was the purpose of our now completed 20 episode series of write-offs for real estate investors. Bernard, do us a favor, please. Let's review what we have accomplished in those 20 episodes before we close it officially.
This has been a great series. And the beauty of this is that we have 20 episodes that touch on 20 key topics that really are interrelated. When brainstorming to try to do something of this nature, it was impossible to figure out a way to do a single episode. For better or for worse, all of these episodes tie into each other to appreciate how the power of cost segregation, or where cost segregation may not be beneficial. We have to do episodes on passive losses. We have to do an episode on depreciation. So it's really by viewing the entirety of this series where you begin to see the associations and the connections between them all. And we do know that the web does have all sorts of info about these topics. But what we're trying to convey, and hopefully have successfully conveyed, is that while each snippet is important, it is really the totality, the comprehensiveness, and the integration of all these topics that enable you to harness the power of real estate tax write-offs legitimately and for the ultimate and optimal outcome. So all of these come together, and depending on your investor profile, the way you will harness these and implement and execute will vary from how another real estate investor executes. So hopefully, based on this, you will be empowered to take the next step in your real estate journey and achieve the ultimate and optimal financial outcome driven by great investments and great tax write-offs.
Beautifully summarized, and that was a privilege to collaborate on this project with you, Bernard, and most importantly, both of us sincerely appreciate your interest in the information we share in our content and your trust. And if our respective companies can help you on your real estate journey, definitely we would be happy to do that. We wish you tremendous success in real estate investing. And once again, it was our honor and privilege to share our content, which is me, Michael Plaks, black belt in real estate taxation and founder of REI Tax Firm, the company that exclusively provides tax preparation and tax strategies for real estate investments. And my friend and colleague.
Yes, Bernard Rees. So as a CPA, I've seen the need for the type of collaboration that I get to have with Michael, and it's an honor and a privilege. You folks are seeing this aspect of our collaboration, but it's a privilege to interact with Michael on the back end all the time, and even to review his public content, which is invaluable. Anybody looking for straight talk and true expertise with regards to real estate taxation and life wisdom should be following Michael. And our interaction, as Michael mentioned, we love integrating with real estate investors and tax professionals in delivering and executing 1031 exchanges, cost segregation studies, and self-directed retirement accounts. Thank you all for listening. And of course, we welcome the opportunity to share this information with you. And we invite you to share this with anybody that you think may benefit from this. Thanks all. Thank you, Michael.